IBM stock has been one of the biggest surprises in the technology sector over the past year. While many investors have focused on high-growth AI stocks like NVIDIA, Microsoft, and Palantir, IBM has quietly delivered strong performance, climbed to new highs, and attracted growing interest from both dividend and growth investors. But after this impressive rally, the big question is IBM still a buy today, or has the stock become overvalued? In this video, we'll analyze IBM's technical chart, fundamentals, recent news, analyst price targets, and discuss where the stock could be headed over the next 12 months. Let's get started. At the time of this analysis, IBM is trading around $252 per share, with a market capitalization of approximately $237 billion. The company currently offers a dividend yield of about 2.7%, making it one of the few large technology companies that combines AI exposure with a meaningful dividend. IBM generated over $67 billion in annual revenue and more than $10 billion in net income, demonstrating that it remains a highly profitable enterprise despite operating in a competitive technology landscape. Let's begin with the chart. IBM recently experienced a powerful rally that pushed the stock toward the $260 to $262 resistance zone. This area acted as a major supply zone where sellers began taking profits. Following that rally, the stock entered a short-term pullback and is now trading near a key support area between $248 and $252. This support zone is extremely important because it could determine IBM's next major move. If buyers continue defending this area, the stock may resume its uptrend and attempt another breakout above $260. On the upside, investors should watch the following price targets. First target, $270. Second target, $280. Third target, $295. The $295 level is especially significant because it aligns closely with the average analyst price target. However, if IBM loses support near $248, the stock could decline toward the next support zone around $240. A breakdown below $240 could open the door for a larger correction toward the $220 to $225 range. Overall, the technical picture remains bullish over the long term, although short-term momentum has weakened after the recent run-up. Now let's look at Wall Street expectations. According to analyst forecasts, average price target $295, highest price target $390, lowest price target $195. Based on the current share price, the average target implies approximately 17% upside potential over the next year. The most bullish analysts believe IBM could rise more than 50%, while the most bearish analysts see downside risk of around 23%. The fact that the average target remains significantly above the current share price suggests that many analysts still believe IBM has room to move higher. Now let's dive into the fundamentals. One of IBM's biggest strengths today is its transformation into an AI and hybrid cloud company. For years, investors viewed IBM as a slow-growing legacy technology business. However, management has been aggressively repositioning the company toward higher growth opportunities. IBM's Watsonx platform has become one of the company's most important AI initiatives, helping businesses deploy and manage artificial intelligence applications. As enterprise AI adoption continues accelerating worldwide, IBM is positioning itself as a major beneficiary of this trend. Another positive factor is IBM's consulting business. Many corporations need assistance implementing AI solutions, cloud infrastructure, and digital transformation projects. IBM's consulting division provides these services and creates additional revenue opportunities. The company also maintains strong profitability and cash flow generation, which supports dividend payments and future investments. For income investors, IBM remains attractive because of its reliable dividend history and shareholder-friendly approach. Several major developments have helped support investor optimism. First, IBM recently announced plans to invest billions of dollars into quantum computing over the coming years. Management believes quantum technology could become one of the most transformative technologies of the next decade, and IBM intends to remain a leader in this space. Second, IBM continues expanding its artificial intelligence offerings. As businesses increasingly adopt AI tools, demand for IBM's enterprise AI solutions continues growing. Third, the company has reported improving earnings performance and maintained confidence in future revenue growth. These developments have strengthened investor confidence that IBM's transformation strategy is working. Of course, every investment has risks. The first risk is competition. IBM faces intense competition from technology giants such as Microsoft, Amazon, Google, and Oracle. These companies are investing heavily in artificial intelligence and cloud computing, creating pressure on IBM to maintain its market position. Another concern is valuation. IBM currently trades at a higher valuation than it did just a few years ago. While the stock is not extremely expensive, it is no longer the bargain it once was. Finally, IBM's growth rate remains slower than many high-growth AI companies. Investors expecting NVIDIA-style growth may be disappointed. IBM is better viewed as a steady compounder rather than a hyper-growth stock. So where could IBM stock go next? Bullish scenario. If IBM successfully expands its AI business, grows cloud revenue, and maintains strong earnings growth, the stock could reach $280 to $300 within the next 12 months, $350 to $390 over the next several years. Neutral scenario. If growth remains steady but not spectacular, IBM may trade between $240 and $295 over the next year. Bearish scenario. If economic conditions weaken or AI growth disappoints, the stock could revisit $220 to $240. IBM may not be the most exciting AI stock on the market, but it offers something many investors appreciate: stability, profitability, dividends, and growing exposure to artificial intelligence and quantum computing. The technical chart remains constructive, analyst. Targets point higher, and the company's fundamentals continue improving. For long-term investors looking for a balance between income and technology growth, IBM remains a compelling stock to watch. The key level to monitor is the $248 to $252 support zone. As long as IBM holds above that area, the long-term bullish trend remains intact. What do you think about IBM stock? Do you believe it can reach $300 or even $390 in the future? Let me know in the comments below. And if you enjoyed this analysis, don't forget to like the video, subscribe to the channel, and turn on notifications so you never miss our next stock market update. Thanks for watching, and I'll see you in the next video.